So what are some things that we can think about? And now more than ever, it becomes super, super critical to work with your CPA and look at income tax projections, not just on a year-by-year basis, but almost looking at this on a multi-year basis, because yeah, okay, nobody wants to pay tax earlier than they have to, true statement. However, if you're looking at this on a multi-year basis, you might see that prepaying a tax at a lower rate might make sense than paying 20% more in 2 years, right? So this is when it's just so critical that you're sitting with your CPA and you're looking at the income from your business or the potential sale of a property that you're planning to trigger, and when should I do it? Should I do it this year versus next year versus 2026? So basically, with the impending higher rates, maybe we should consider accelerating income. Maybe Roth conversions that we thought about doing, they looked attractive, but because the rates are going up, we might want to do that this year or next year, spread it between this year and next year so that it's not such a big pill to swallow. With the reduction in the standard deduction, consider deferring payment of tax deductible items to a year when we'll be able to take advantage of those deductions. Then the removal of the cap for state and local income taxes. Now we know we will be able to deduct this. So perhaps if we can defer them, right? You don't want to be delinquent either. So think about whether it makes sense to defer them. Miscellaneous itemized deductions, again, can we defer them into the year where we can actually take advantage of them? And this one is huge because a lot of our clients are very charitable. We work with the nicest people and they really want to help their communities. And so they make significant gifts either outright to various charitable organizations or they fund a donor advised fund. So because of the impending phase outs, we may want to consider accelerating those donations so that we're doing it before we're subject to the phase out. Because if we're making a $100,000 gift, it's all great, it feels great, but it kind of hurts if you're only able to deduct $20,000, and that's effectively what would happen when the phase outs come back in. So think about that. You give $100,000, but only able to deduct $20,000. So that's pretty painful. So perhaps we should explore accelerating them all and bunching them, maybe putting them into that little donor advised fund in anticipation for this phase out that's looming there in the background. And then the elimination of the qualified business income tax deduction, it might make sense to accelerate income. But be careful, right? Because if you accelerate too much income, then you're shooting yourself in the foot and possibly having some of that deduction phased out. So again, it's super critical between this year and next year to sit with your CPA and run the year-by-year projections. And finally, on the estate tax exemption, while I will say that we want to take advantage of these elevated estate tax exemption levels, we also don't want to do it at the cost of our own well-being. We got to put on the mask first, right? So we're not going to worry about everyone else and trying not to pay taxes and then turn around and say, oh my God, now I have to rely on my kids to be able to do all the things I want to do. So this is when it becomes really critical to running those financial projections and determining how much wealth you can comfortably, irrevocably give away before you venture into any type of program where you're taking advantage of these exemptions. But there are some creative ways to do it and still be able to access whatever you're giving away. And that has to be done very creatively. So that I just wanted high level. It's a lot to try to cover in 7 minutes, which I think is what you gave me, and I probably went over. But if anybody has any questions and they want to go through what some of those strategies are on the estate planning side, I'd love to walk them through more slides that I have on that. And you know, I can talk about that all day if you let me.